Hello and welcome back to FOREX Investment Group. Today we are going to talk about a very common concept, and I've been asked by several traders on how I see it if I actually use it in my trading. This concept is the order block concept. It's a common way of trading that has gained a lot of popularity over the past months in the field of trading. So I've just decided to give out my view and how you can actually incorporate this concept in your trading. So before we go further, please hit that subscribe button if you're new here, as well as check the notification bell icon so that you'll be notified each and every time we upload a new video. And if you haven't done so, check out our free Telegram channel where we share our free signals, free advice, as well as support. The link is right below. So without wasting much of your time, let's jump into the content. So basically, what are order blocks? Order blocks are basically something that was derived from support and resistance. But in this case, we are actually creating a zone around those support and resistance levels. So in simple terms, we are actually saying whenever the market create a peak or whenever the market create a dip, this can actually act as an order block depending on the time frame you are viewing the charts. So how do we use these in our trading is the first question to come in mind. So in my context, I would love to use them in this way. So the first thing that I do in order to find the useful order blocks whenever I get to the charts, I love to start on the H1 time frame. The charts, the trends usually go as a downtrend, right? Or as an uptrend. So in downtrend, I would love to use these lower lows as my zones or as my order blocks. We'll explain this on the charts and actually see how it all works. So whenever the market is trending down, we usually see lower lows and lower highs, lower lows, lower highs, lower lows, lower highs. So in my case, my zones of interest or my order blocks of interest will be those that actually form at the lower lows of the trend as we'll be going down. So what I will be waiting to see is to break all these order blocks and then retest them in the next flow. So I'll term this as the previous flow. This is the previous flow, and let's say the market is now in the current flow. So in the current flow, what I will be interested to see is to break off order blocks from the previous flow and retest them as we go up. If we break, I expect to see the market coming back to retest and issue some rejection signs that the market is actually exhausting in those order blocks for me to go in the prior direction. So without wasting much of the time dwelling on these sketches, let's jump over the charts and see how exactly this happens in real markets. So this is NZD against USD, and we are going to use this to illustrate whatever we were discussing on those sketches. So the first thing, as I said earlier, is to look for the previous flow. So in this case, we want to start from this point. Therefore, going forward, therefore this becomes our previous flow to this flow. So we will first mark out all the levels that we have been discussing, which are lower lows, and lower lows are simple to see. As you can see, this was a high, a lower low, a high, a lower low, and going forth, lower low, going forth. So I will use a rectangle to mark the order blocks. So this was the first lower low, or the first order block. Then this was the second lower low, and this was the third lower low. So as you can see, as we are going up from this point, the market is actually reversed. What we are now interested in is to see the market breaking off those order blocks. So as you can see from this point, we broke this order block, and after we broke that, we came back to retest that same order block. Then as the market progressed, it actually broke the second order block that we would have marked already. As you can see, we would have marked this already, and we broke that, and we came back to this zone and continued. Then after that, this is the third order block, and on that third order block, we can see that the market actually broke that third order block and retested, and the market continued. So as you can see, the lower lows are actually giving us most reliable order blocks, but we are saying there's nothing certain in the forex market. Sometimes you would see the higher lows or the higher highs actually holding and giving useful order blocks. So this was the previous flow to this flow. So we want to now use this flow in order for us to see where we were going to enter in this current flow. So on that current flow, I'm just going to pick out these rectangles that I've already drawn. We can see that this was the first lower high of the previous flow, right? We broke and we retested that previous lower high. This was the first point. Then the second point, let's see how everything went. We broke it, then we retested it. Therefore, we had the first point of entry, then another point of entry as we were going down on this current flow. So all these points of entries were actually derived from the previous flow. So the first thing that you have to do is to look for the previous flow. Try to mark the lower or the peaks, the lower peaks of that previous flow. Then derive the order blocks from those lower peaks. Then in the current flow, you would wait for them to be broken and then retested. Your entry should be interested in being taken on the retest of those broken order blocks. So that's all we had, but there's another concept that is required for you to actually make it. You need bias. Bias is what I teach in the one-on-ones, and if ever you want to know how to get the bias within the market, you can actually contact me using any of our social media handles down below. On that note, we come to the end of this video. Thank you for watching. Like and subscribe.